difference of the interest that it charges on the deposits versus the interest that it makes on the loans that it gives, and therefore this as a percentage of its loan portfolio came in at 4.65%. Kotak Mahindra Bank's NII, which is the net interest income, also increased by 6% annually, and the net interest margin rose by came in at 4.65%. As I was saying, provisions also rose dramatically. In fact, provisions rose by about 109%, sort of indicating that the bank before we give you actually a lot more highlights, let's cut across to Kotak Mahindra Bank's presser on Q1 FY26 earnings.
Is in us. Every initiative, every product, every platform we have launched is designed to serve our customers better, and this quarter reflects that focus. Let me start with the banking business, where we continue to deepen customer relationships across segments. Our combined SME book continues to grow strongly as we focus on the holistic wallet of the customer. We are investing in platforms like Fin and our mobile banking app to enhance experience and functionality. For our affluent customers, we have formally launched Solitaire, a premium proposition that brings together the best of Kotak across investments, protection, credit cards, personal and business loans, all on a pre-approved basis for the customer. Solitaire is being well received in the marketplace, and we believe it's one of the finest premium propositions in India today. Our 811 business has come back strongly this quarter. The new 811 app is seeing healthy migration and continues to be a key source of granular, low-cost deposits. It is a proposition that resonates deeply with the aspirations of core India and allows us to acquire customers at scale and cross-sell effectively. Credit cards fulfill a very important need for our target customers, and we have launched new card products, Solitaire and Kotak Indigo, to cater to our customers' needs, with more initiatives lined up in the next few quarters. The onset of a good monsoon augurs well for our rural portfolio. There has been some stress in the retail CV segment, and we shall continue to monitor this very closely. Like I said, we've seen a peaking of our credit costs in the MFI portfolio, and with incremental slippages on the decline, we have cautiously resumed fresh disbursements in microfinance. Our capital market businesses had a strong quarter, despite the broader market environment remaining relatively subdued. Kotak Securities continued to gain market share in both cash and derivatives, and our investment banking arm seems a very healthy pipeline as corporates tap capital markets. In our asset management businesses, we have seen continued strong performance with 25% year-on-year growth in average assets under management. This reflects our ability to capture the shift from saving to investment. Our strategy is clear: serve each customer segment with relevance, agility, and trust. Let me now hand over to Devang to walk us through the financial numbers.
Thank you, Ashok. Good evening, friends. Let me start with bank standalone highlights. Bank's PAT for Q1 26 was 3,282 crores. Net interest margin was 4.65%, down largely due to a repo rate cut. Net advances of the bank grew at 14.1% YOY to 4,44,823 crores at 30th June, whereas the average net advances for the quarter also grew around 14.7% YOY. Total deposits of the bank grew to 5,12,838 crores for Q1 26, up 15% YOY. Within deposits, current account and fixed rates are growing at 16% and 9% YOY respectively. CASA ratio at 30th June stood at 40.9%. Credit to deposit ratio at 30th June as 86.7%. At 30th June, GNPA was 1.48% and net NPA at 0.34%. Provision coverage ratio stood at 77%. Credit cost for the quarter was higher at 0.93%, mainly due to MFI and retail commercial vehicle segments. Capital adequacy of the bank remained healthy at 30th June at 23%, of which CET1 ratio itself 21.8%. Now let me share the highlights of consolidated numbers. Consolidated PAT for Q1 increased to 4,472 crores. Consolidated customer assets grew 13% YOY to 5,57,369 crore at 30th June. Consolidated ROA was 2.03% and ROE at 11.13%. Consolidated capital adequacy as per Basel III stood at 23.7%, of which CET1 itself 22.7%. Consolidated net worth of the group at 30th June close to 1,65,000 crores, and the book value of the share at 30th June at 829 rupees per share, up 17% YOY. Coming to the key subsidiaries performances, Kotak Securities, which is into the broking business, recorded Q1 profit of 465 crores, up 16% YOY with improvement in market share as well. Kotak AMC and the trusteeship company recorded a profit of 326 crores, up 86% YOY growth with a 24% YOY increase in equity average AUM, which now is 3,32,638 crores. Kotak Prime customers grew at 16%. Customer assets grew at 16% YOY to 41,400 crores and PAT at 272 crore, up 17% on a YOY basis. Kotak Life ended quarter with a PAT of 327 crores, up 80% on a YOY basis. At the end, the current quarter's group performance actually reflects the strength of our conglomerate model, as evidenced by the strong growth in our capital market and AMC businesses, and non-bank entities now contribute 34% of the group profits for the quarter ended 30th June 2026. Thank you.
Thank you, Devang, and thank you, Ashok. We're now ready to start our Q&A session. Let me start with some instructions before we do that. Questions will be taken on a first-come basis. If you have a question, please use the raise hand feature on Zoom. Once I call upon you to ask your question, please unmute yourself. Please state your name and the organization you represent if I haven't done so before asking your question. Do remember to mute yourself once you've asked your question. We request that you keep your questions brief and to the point to allow time for as many questions as possible. If you encounter any technical issues during the conference, please reach out to the Kotak PR team or the Weber Shandwick team for assistance. Please note that the chat function will be disabled during the duration of the event. With that, let me start with the first question from Vishwanath Nair from NDTV Profit. Vishy?
Right. Mr. Vaswani, the first question is with respect to your credit card portfolio, specifically 12% reduction year on year. I wanted to understand, despite the removal of the RBI's restrictions on credit card onboarding, why this number has not gone up, even sequentially it's gone down. And on the second part, you spoke about microfinance, that microfinance business is starting to cautiously start doing business. Outstanding has been consistently coming down close to 6,000 crore now. What is the outlook on that? And lastly, if you can allow me, I wanted to get a sense of why this elevated provisioning happened in Q1. It's gone up from 900 odd crore to close to 1,200 crore now.
Yeah, Vishy, thanks. See, on credit cards, clearly, all of last year, we couldn't issue any credit cards. And therefore, as you would know, as you don't issue new credit cards, the outstandings kind of come down. And then we started issuing credit cards after the embargo. So in the first quarter of this year, it takes a bit of time to get to get the engines kind of going, and that's what we've been going through. With the launch of the new product, particularly Solitaire and the relaunch of the Indigo card, I feel pretty good about getting back into a good positive trajectory on cards. This is a business which is very special to us, and we'll pay a lot of attention to it and hopefully come back to seeing nice growth. Also in this quarter, we've had a number of cards which were dormant or not active, and therefore we just had a bunch of cards which we had to close, and that reflected in the card numbers. But over the next couple of quarters, I think you'll see our card business come back quite well. On MFI, like I said, Q1, we think credit costs have kind of peaked, and we have selectively started going back. Now, the MFI book is a typically 24 to 30 month kind of book, and therefore it obviously runs off pretty fast. Currently, the new disbursements we are doing is in or about the same level of runoffs. So the book will kind of stabilize and start climbing again once disbursements pick up. So that should be more towards the second half of the year. And your third question around elevated provisioning, literally in retail unsecured credit, it is all kind of rule based. MFI, the kind of portfolio that had flown into the 90 and 180 DPD got provided for. Ditto the same thing with retail commercial credit. So it's just a matter of following the rules and providing as per those rules.
Thank you, Ashok. Sorry, Shanti, you want to add to that?
No, I just wanted to add to the last question, which was really about the spike in credit costs. I think two key factors. One is microfinance, and the second is retail commercial vehicle. I think microfinance, as Ashok has said, we believe that the delinquencies have peaked, and probably we'll see stabilization from here on, and maybe the second half of the year, you should see it improve much better. As far as retail commercial vehicles is concerned, I think this quarter we saw a spike. It's really the slowing macro playing now, reflecting in the micro. We have in the last 2 quarters called that we are seeing a slowdown. But however, in this quarter, we saw a spike. And having said that, it is an important business segment for us. And the ROE of the business, even after the risks costs, are quite good. So we will dynamically manage the spike as we see into the next few quarters.
Thank you, Shanti. I'll move on to the next one from Ritu Singh from CNBC TV18.
Hi, everyone. Just, to follow up on a couple of things. In the asset quality, could you give us a sense of what, for the full year, you expect this to be, given the stress you're seeing in the retail CV segment and the MFI business, where you're saying you expect some sort of an improvement in the second year? And even on your unsecured book, we've been seeing it going down. You've explained some of the reasons, but you had earlier indicated this ambition, or rather this target of wanting the unsecured book to grow in mid-teens to get there. Is that still, what you wish to do? And even in the loan growth, while it was strong at 14%, the bulk of it was still driven by corporate banking, not so much consumer banking. So a word on that as well, whether that will be the trend we continue to see going ahead as well. And if I may add a word on margins, a 32 basis point decline. I know Devang said it's largely a function of, the RBI rate cuts. But do you see levers for improving this going ahead? Thank you.
Wow, that's a lot.
6 questions in one.
Yeah. So on the credit costs, I think we've kind of covered it, right? Look, microfinance contributed most of the increase. We believe it's kind of peaked. It will be coming down from here on, exactly like Shanti said. Yes, we did see stress in the commercial vehicle business this quarter. Like Shanti said, this is partly or mainly due to the macroeconomic kind of environment. This is a very good business. It's a good business for us. 10% of our loans virtually and has delivered very good ROEs over the year. We'll manage, this is really the retail lower end segment, which we'll have to manage, and we'll manage that through. As far as cards and PL is concerned, PL, we are continuing to grow. As you know, we did the acquisition of Standard Chartered, and that growth will kind of continue. Credit costs are well under control, and we feel comfortable. And credit cards will kind of come back, like I mentioned. Let me leave the NIM question to Devang.
Yes, hi. You're right. I said about the NIM reduction largely due to repo cut, and which is expected with a 1% cut over 1 year last, and with your 60% of the book, which is a repo linked book. So the impact happens on an immediate basis, whereas the repricing of the deposits. So of course, bank has taken measures in terms of, as you know, reducing the saving account rate interest, also reducing the rates on the term deposits. As well as we are expecting the benefit of the repo rate, the CRR cut, which will flow in from September over a period of time. So I think it is largely a timing difference. While the earnings get cut upfront, as the deposit gets repricing, I think it will even out during the rest of the year over a period of time. So that's what I think the NIM trajectory and the reasons are.
I'd like to address, Ritu, your point on asset growth. If you look at across the assets, and if you look, the consumer side has also grown across mortgages, which is both home loan LAP, business banking, which is the small SME, and personal loans and business loans have all grown. So if you look at X personal loans, X cards, right, and consumer durables, you will find that our consumer banking assets across all of that has grown. In the corporate side, actually, it's largely SME and mid-market. There was some migration done from SME book to a few reclassification within the corporate bank to enable us to serve the customers better. But the growth in the corporate side has been driven by our SME and mid-markets businesses, which are very important cohorts for us from a 360-degree customer perspective. So it is not just the corporate bank that's grown. Both consumer, SME, and mid-markets in corporate have grown this quarter.
Thank you, Shanti. We'll move on to the next question from Ankur Mishra from ET Now. Ankur? Ankur, you're still on mute. If you want to unmute yourself.
All right. So that was the results conference. It's still ongoing, of course, where the management of Kotak Mahindra Bank is explaining what exactly happened during the quarter. If you were to look at the net profit figure, of course, last year they had a one-time sort of a boost on the net profit because of the sale in shareholding in the insurance arm, which was sold to, of course, Zurich. After that, there was a one-time benefit that was given in that quarter. So therefore, the year-on-year comparison may not be appropriate. Having said that, even adjusting for that one-time benefit, the net profit has dropped about 7% odd. That is indicative of the higher provisioning or higher credit costs that the bank has seen, and the bank has clarified, of course, that this higher provisioning is coming because of defaults in the microfinance business, which has been a long pending problem, and also on retail commercial vehicles. That's an important part. Retail commercial vehicle is seeing a hit because of the broader slowing down of the macroeconomic conditions. And that's leading to Kotak Mahindra Bank seeing elevated provisions of about 1,200 odd crore and slippages of about 1,800 odd crore during Q1, which is adding to that stress point. The other part, which was interesting to me, which was on the credit card growth portfolio, there, of course, Ashok Vaswani is saying that this is a business that we like and we want to continue growing that business. They want to see a good growth on that business. I don't quite understand what good growth is because he didn't specify the ratio at which that book should be growing. But there's been a general sort of understanding that credit card and personal loans have been growing slower for private banks across the board. So how Kotak Mahindra Bank is able to utilize this for a future growth period and expand that book, that is something that we will closely watch out for. I'll go back to you, Malika, back to you in the studio.
Right, Vishwanath, thank you so much for that and wrapping the key highlights of the conference. We spoke to Akshay Jatia of Westlife Foodworld viewers about their outlook and what will drive their growth ahead. Listen in.
Well, if you thought you could not imagine the words protein content and a McD burger in the same line, think again. Today, I'm in conversation with Akshay Jatia, CEO at Westlife Foodworld, and he's going to be talking to us about McD's latest offering. Thank you so much for taking time out to speak to us at NDTV Profit, Akshay.
Thank you so much. Thank you for having me.
So, first up to begin with, tell us a little bit about your latest offering and what you hope to achieve with it.
No, so I think that's a great question because our intent and objective is to make sure that McDonald's remains an everyday use case for our customers. I think customers have become a lot more exposed, educated in terms of what they are eating, and they are demanding transparency, nutritional content being, wholesome and nutritious. And I think that's something that we actually have always appreciated, and we've always taken the first step. So in terms of this journey that we call Real Food, Real Good, this is one more intervention where protein has become increasingly important in our diet, and actually Indians are quite protein deficient. So in order to bridge that gap and make McDonald's relevant to bridge that gap, we've launched this protein slice, which is a 15 gram slice and has 5 grams of protein. So more than 30% actually of the nutritional content comes from protein, and that's not something easy to do. And we've done this in partnership with the CFTRI, which is India's premier food technology institute, to make sure that what customers are getting is top of the line in terms of nutritional content. So I think we're very excited, and we feel that this is going to drive further occasions at McDonald's in the years to come.
All right. Tell us a little bit more about whether it's the first of more such products we can see in the offering. And adding to that, also tell us a little bit about what you see the in-store demand outlook for the coming year.
So, like I mentioned, this is part of our journey, as we call it. It's called Real Food, Real Good. And there are multiple steps we've already taken in the past. So, we've reduced sodium content, we've reduced oil from our mayonnaise, we've made the aloo tikki, which is one of our most popular burgers, into a balanced meal. Last year, most importantly, again in partnership with the CFTRI, we launched the multi-millet bun. And this is one more step, again, like I said, to make sure that our food is wholesome and nutritious, and we are transparent about it and partnering with our customers to ensure that they're getting what they want when they eat outside.
All right. What is the outlook in terms of store addition plans for the year? And is there any specific sort of demography or location that you are going to be targeting?
So as we've maintained, Vision 2027 is our guiding light, and the plan is to open roughly around 580 to 630 restaurants by then. Last year and last financial year we delivered 46 new restaurants. We should remain on a similar trajectory of 40 to 45 restaurants in the coming financial year as well. But again, the endeavor is to get to the numbers that we've promised in our Vision 2027 document. There is a lot of opportunity in our country, and we do feel that with interventions like this, making McDonald's more relevant, making nutrition more accessible at our locations, customers will visit McDonald's more often, and that itself will allow us to expand our presence even further.
Okay, so we did see in your latest earnings, we did see a dip in net profit. What can you tell us a little bit about that, and also what is the outlook for the top line as well as the bottom line for FY26?
So I think we've had a pretty challenging past couple of years in terms of macro as well as the QSR category. As a company, we've been putting very strong efforts now, and the last 3 quarters have delivered positive same-store sales growth. I think actually from a profitability point of view, at a restaurant operating margin level, we delivered improvement despite the challenging environment. So I'm quite proud of the fact that we've been able to unlock operational efficiencies despite subdued same-store sales growth. Moving forward, like we've maintained in all our commentary, we do anticipate an improving trend and trajectory in terms of our same-store sales growth, and that itself should deliver the growth that we require in terms of sales as well as our EBITDA margins.
Got it. One last question before we can let you go. You did touch upon the challenging macro environment that we have been seeing in terms of demand, in terms of consumption. Can you elaborate a little bit on that? And do you see an improvement currently and going forward?
So, I mean, it's been a hot topic across all forums, all publications, but I think that what we have been seeing recently is that inflation has started coming off. There are a lot of measures that have been introduced by the central government and state governments in terms of stimulating demand. So we are quite confident that the macro will only improve now onwards, and I think we want to take this on the front foot. We want to operate in a gain frame, as we call it, which is to take advantage of these tailwinds, but at the same time use our differentiated strategy to continue to drive visits to our restaurants. And there's a large market that's available in terms of people eating out, which will allow us to continue to deliver the aspirations that we have, as well as the targets that we've set ourselves.
Thank you so much for taking time out to speak to us at NDTV Profit.
Great. Thank you so much.
Thank you for watching.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency.
Hello and welcome to Voice What presents the great business story, transforming India in association with NDTV Profit. Decor is one of the world's largest manufacturers of soft furnishing fabrics, with its manufacturing units creating over 1,20,000 meters of high quality fabrics every day for homes across the world. Joining me now is the Managing Director Ajay Arora and Creative Director for Decor Home Fabrics, Simon Arora. Thank you so much for joining us to take us through the journey of Decor and Fabricaire as a globally local brand that bring the philosophy of beauty and performance to life. What I'd like to talk about is ask you to take us through this incredible journey of Decor and Fabricaire, which are globally local brands and bring to life the philosophy of performance and beauty.
The first, game changer has actually been my marriage with Simon, and my entry into the world of design and home through this association. And after that, there was a failure of my current family textile business of apparel. So that was the second game changer for me. Then moved on, me and Simon, we built an excellent manufacturing platform and design partnerships with the best in Europe. After spending a decade doing this, we thought that we were ready now to address the Indian market. This was about 2010 that we decided to approach the Indian consumer with our promise and our capabilities. We became the first player to use a Bollywood couple, Mr. Shah Rukh Khan and Gauri Khan, to help amplify our messaging and to bring a true connect of how a beautiful home is actually lived. And we tried to ensure that our product, which is already up to the mark, is actually delivered to the consumer in a manner which is never seen before. We built a digital platform, we built robotic warehouses, and then ensured that retailers and our channel partners could be proud of the D-Decor brand. We created a pull demand. We make sure that people were spoiled for choice. We rolled out 6,000 SKUs, a buffet where everybody's design and functional needs can be met. And the delivery was 98-99% within 24 to 48 hours, and the retailer never kept stock. And because we had the experience of export, again, I would say we're now delivering through Fabricare, a separate brand. And since there's a huge move towards premiumization, we said that there's D-Decor, that stands for beautiful product, you're spoiled for choice, and now you're Fabricare, which is beautiful and performance.
As creative director and co-founder, how do you balance innovation and timelessness in D-Decor's collections, especially when you're launching over 20,000 SKUs every year?
Innovation for us is not trend-driven alone. It's rooted in relevance, functionality, and an emotional connection to the consumer. At the same time, we have a deep respect for timeless design. We draw from classic elements like heritage weaves, natural palettes, and enduring craftsmanship that never go out of style. The magic really happens when we reinterpret these traditions through a contemporary lens, creating collections that feel current yet timeless. Our goal is to design products that not only elevate homes today, but remain cherished for years to come.
With exports to over 65 countries, multiple manufacturing facilities, how do you maintain a sense of consistency, quality and brand identity across such a massive scale?
First choice that we made was that we want our manufacturing platform to be integrated and under our control. Second strategic choice we made is we wanted to create a spread of assortment, maintaining quality and beautiful, attractive things. The third choice we made is that we would like to ensure that we spread, like you said, across various countries, so that the demand, even though you have spread a lot of product, but you've also spread a lot of customers, it can get aggregated. And then we wired everything, the whole platform with IT. Simon's team consistently ensures that all of this is chosen very qualitatively and thoughtfully. Our whole brand and marketing team is, sitting under her aesthetic editing to ensure that a beautiful product is presented beautifully. So the short answer is strategic consistency.
What inspired D-Decor to invest in digital assets so early on?
If you've done technology adoption, if you've done connection between all your different technology, different platforms, and then you have got AI sitting now on top of it, I think you can serve all your stakeholders in a very exciting, seamless manner, and you can give them a personalized experience. It's helping our people understand and express better. Bidirectional communication is done through interconnected platforms. That's why we feel that digital innovation is extremely important. We are trying our level best to use technology to make our factory worker, our teams' lives better. That's why we're using technology.
Fabricare is a bold step into high performance fabrics. What gap in the market were you looking at addressing, and how does this reflect the future of functional luxury?
Our clients wanted fabrics that looked exquisite, felt luxurious, but also stood up to real life. Modern homes are dynamic, and our furnishings needed to be just as resilient. The performance line was introduced to create practical functionality along with aesthetic beauty. These fabrics are engineered to be stain resistant, fade proof, and easy to maintain, without compromising on softness, hand feel, or elegance. What makes them unique is that they stand out. They look and feel like luxury, but they live like performance.
With such a large global footprint, how is D-Decor rethinking its processes, sourcing and materials to be more environmentally sustainable?
Through our partnership with IKEA, we have found an appreciator of sustainability like no other. So we built the competency inside in choice of materials, in modification of sources of energy. We were told by IKEA to go coal-free by 2025. We did it in 2022. And our case was showcased by IKEA to all Indian vendors that if this company is able to do it, why are you not able to do it? So we decided to be a leader in that space. We recycle 100% of our water. We are able to ensure that the sludge that goes out of the water goes into a boiler and provides thermal energy. The messaging and the communication to India of sustainability that we chose is performance. Because if a product lasts longer, there's less waste. So if you build quality in a product, it's sustainable.
How did you approach the designing part of a high-tech product range without compromising on the sensory luxury that D-Decor is known for?
From the start, we were very clear. Performance couldn't come at the cost of luxury. We worked closely with some of the world's most advanced textile mills and innovation labs to develop finishes and fibers that deliver durability. Our team spent months testing yarn blends, experimenting with weave structures, and refining finishing techniques until we achieved the perfect balance. The result is a collection that feels as rich and indulgent, but performs beautifully under real-life conditions.
How do you see the D-Decor ecosystem evolve in the next 5 to 10 years?
We will serve more personalized product in the future to our channel partners, architects and interior designers, who will then convey back to us through information exchange their personalized needs. So we'll have to build to order. We'll have to build faster. How are we going to do it? It's a work in progress. We have to rewire system, people, and I would also say the business model. There is going to be, AI, which helps us understand what our consumers want individually. So you can have chatbots talking. All of that is already done. It's very available. Now it's the time to redraw the entire blueprint. So that's what we're working on. It's a bit of a work in progress, but it is going to be game changing.
Consumer tastes have changed drastically over the last few years. How has D-Decor stayed relevant since its beginning till now?
We pay very close attention to emerging lifestyles, shifts in consumer values. Despite constantly innovating, we've stayed true to our core, which is impeccable quality, refined aesthetics, and meaningful craftsmanship. What truly sets us apart is our ability to anticipate what's next without ever losing sight of who we are. That's what keeps our brand not just relevant, but aspirational.
So beyond business, both of you have also been involved in philanthropic work, especially in education. How do these values tie into D-Decor's philosophy of live beautiful?
And education is very empowering. So I think the connect of wanting everyone to live beautiful is allowing the ones who cannot afford a better education but yet deserve it, is where we step in and try to do our small little part.
What's your shared vision for D-Decor and for D-Decor's future, and also not just as a fabric brand but as a global lifestyle and design powerhouse?
We want to create a holistic design universe, from furnishings and accessories to spaces that inspire how people live, work, and feel in those environments. Our goal is in shaping homes, hospitality spaces, and commercial interiors across the world with fabrics that don't just dress windows or furniture, but elevate the way people experience spaces.
Our vision is definitely to be a design platform of products and services that will help everyone live beautiful and perform better.
Thank you so much for your time, and here's wishing you all the best. And that's a beautiful philosophy, live beautiful. So hoping that it only gets bigger and better from now.
Thank you, Saurabh.
Thank you very much.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा टेलिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national daily.
Hello and welcome to VoiceSpot presents the great business story transforming India in association with NDTV Profit. Now our guest today is a global leader in electrical test and measurement and also automation solutions. Let me introduce to you, we have with us Mr. Narendra Jorimal Golia. He's the founder and executive chairman of Rishabh Instruments Limited. It's really a pleasure to have you with us, sir, on NDTV Profit.
Thank you so much.
To begin with, I think we have to ask you about your journey, which started way back in 1982. As the founder, the vision back then, and how has it evolved? Take us through your journey, please.
Yeah, it was nearly 40 years ago, little more than 40 years ago that we started. And the journey of Rishabh Instruments is the journey of India. India was the closed economy. We were nowhere competing in the world. India did not have a reputation for supplying quality products. And therefore we had to come out of all these challenges to be able to make products in India, for India, and then export it to the world. Today we all talk about make in India, made in India, but we started way back in 82. We started with a collaboration with a company called BBC Metrawatt. It was part of the present ABB group. Once we established the product, we went on expanding the basket from voltmeters, ammeters to maximum demand meters. We started exporting back to our collaborators, and that was a turning point. L&T started marketing these instruments. And as soon as we established one product line, we said, okay, now what next?
Yeah.
So we went and got another collaboration from Germany itself for multimeters. So we went on expanding the product range into electronic products on one side. On the other side, we started exporting to various countries, and on the third side, we opened our R&D center in Nashik. Similarly, when we were very good at the Indian market, European people did not still accept made in India, so we set up a manufacturing hub in Poland. Actually, we acquired it from the government of Poland. And there were a lot of challenges, but God willing, inshallah, jo bolte hain, ki we were able to.
It worked out well.
It worked out well. Everything worked out well, And then there was a lot of exchange of knowledge between Poland and India, and so do the other countries in UK, USA, China. Today we have one facility in Czech Republic. So it went on expanding.
How you integrate diverse cultures, like you said, you had your set of challenges, but integrating diverse cultures as well as technology into one cohesive, innovation-driven organization. I think that would be really interesting. Please share that.
Not easy at all, especially culture. Slowly, step by step, it was a great journey. We taught those people our culture, we asked our people to learn their culture. But most important was the R&D which was being developed. People enjoyed working with Indian engineers, and our engineers enjoyed working with their engineers, learning their way of doing things, to do it efficiently, to really come up with new technologies which were measuring the quality of power. So we went on doing that. And today I can say every 2-3 years we make our presence felt in one new country, whatever that country is.
Which is amazing, yeah.
So today we are present in 20 countries, and hopefully tomorrow we'll be in 30-40 countries.
Well, Mr. Golia, I want to ask you, obviously Rishabh Instruments is known for, vertical integration as well as in-house manufacturing. So how has this approach contributed to your innovation and product design? Because that's what you've been talking a lot. I mean, a lot of focus is on innovation and R&D.
We have so many different people from diverse cultures who help us to do this kind of vertical integration, backward integration, being able to do things ourselves. See, ours is a relatively low volume, but still compared to automobiles and all where they talk in millions, we do not talk. Therefore, it becomes important that we have a back-to-back facility where we are able to make the components. And although instruments are instruments, the heart of the instrument is the same, but you have to package it in a way which is adaptable to the local countries. And that is possible only when you have backward integration, and you can do your molding, you can do your punching, you can do what you need to do and still cater to the local market. Similarly, the standards are different. In Europe, you will always have the EN standards, European norms, they call it, or DIN standards, whereas in US, you will always have ANSI standards. In Japan, you will always have GIST standards. So we have learnt all these one by one. But when we have facilities in-house, the response time really goes down. And today, the name of the game is fast response, nothing.
When you say fast response, obviously I have to ask you if you can share with us, our viewers, a recent product or something to do with your R&D breakthrough which you would want to tell us, and it exemplifies your strategy of vertical integration as well as sustainable innovation.
The world is very conscious about green energy, so we are into solar inverters. Solar inverter is a device which takes the DC voltage generated by the panels and then converts it into AC voltage which can be fed into the grid. Now we are into many new products which will, for example, power quality is a really recent addition where for early years the availability of power was a problem. Today I think even the villages in India, most of them have power. Power quality has become a big word, and our R&D facility makes sure that the power quality remains within the prescribed limits set by the authorities who are approving either the product or the service, and therefore it gives us the flexibility to be able to meet the standards set by the people.
What role does India play base in your future growth plans, and also when it comes to your global operations, specifically because I'm asking you about manufacturing here in Nashik?
So even today the basic R&D distribution of the work happens from India. The maximum number of R&D people are in India. The maximum number of instruments made per year are in India. The electronics division is the largest in the world, is in India.
Okay.
But aluminium, we have about 400 people working for us in the aluminium die casting in Poland.
Okay.
And that facility we never set up in India. But electronics for sure, the new technologies, new microcontrollers, new developments which happen, they happen in Nashik in India, and then of course they are distributed all over the world.
You've invested in green energy R&D. I think you've done it in IIT Jodhpur as well as Nashik, and also conservation. Mr. Golia, how are these initiatives shaping both the brand as well as the bottom line?
You have to be in line with what the world is talking about. Sustainability today is the biggest, let's say, challenge for and as well as the opportunity for people. Having said that, a lot of research is being done in green energy, in renewable energy, and at IIT Jodhpur we have built a center which is called the Rishabh Center for Innovation in Renewable Energy, in green energy. So that is, you can imagine, there are more than 14 full-time professors, and then there are PhD students working on new forms of green energy. Same way we are working at IIT Bombay. I'm an ex-student of IIT Bombay, so we obviously have a special attachment to IIT
Absolutely,
Bombay.
where you've grown up, learned, yeah.
And therefore there we are making sustainable housing. It's called the HEARTS project, HEARTS. But the whole point is that you use more and more materials in housing which are either renewable or which can be sustainable in the future. So we have really made houses for the villages. Prototypes are ready. Now we are going to roll it out in a bulk format. And it is done by the class of 75, we call it. All the students who passed out in 75, they have contributed to this. So from that point of view, a lot of work is being done by many organizations, not only Rishabh, but Rishabh is also playing a very big role in making sure that all that we do is sustainable.
And giving back and working, I think, for the environment.
Sure.
How are you ensuring, or how are you cultivating leadership, technical excellence at every level? Do you also see that a challenge with the present generation?
We have curated a program where we take young people who pass out of college. We give them 3 years of training in different skills, in sales, in marketing, in manufacturing, in technology, in quality, wherever they're
So in all your verticals, in fact.
All your verticals. We have a program here called mentoring, where the senior people will mentor the junior engineers, and one-to-one they will spend a couple of hours every week to make sure that they imbibe some of the skills. We send them to colleges like IIM or other places where they go and learn. The same way we have programs in Poznan, Poznan University, Zelenagora University. We send engineers from India to Poland, and 2 year they do a master's management course. Within the company we have got pairing up done, where seniors pair up with the juniors, and I'm so happy to see some of the people come. One of them has come with a chartered flight from US.
Okay.
So
that kind of regard.
There, but he came back to wish us, and of course he's become a big man in the USA, working for some international corporation.
Lastly, of course, I have to ask you this: looking ahead, where do you see Rishabh Instruments in the next 5 to 10 years, and specifically in terms of technology, in terms of sustainability, in terms of innovation?
The way we have developed technology, the way we have developed people, the way we have developed markets, the way we have got people all over, I don't think the future can be very different. Of course, the products will be more complex, technologies will develop further, power quality will take a very big leap forward. We know that both on the product side, on the people side, on the application engineering side, today application engineering plays a big role. Solar inverters is going to be a very big thing for the future, and it's recyclable. Sun again, next year again you have the sun, next year again you have the sun. So from that point of view, I think it is very good that we are working on that. Power quality, see, whether you work with green energy or you work with black energy, which is the carbon energy, nevertheless you need to measure, you need to control, you need to transmit from one place to another. So that is our core strength, that is our forte. We have developed very good measurement techniques, and we are leaders in technology. We are working with IIT Bombay. We have one research center within the IIT campus, IIT Bombay campus, and there we work with professors. We also try to motivate them to come out of their research mindset and also work with the industry. It is doing well. IIT Jodhpur, I talked to you. So we are really making sure that we give back to society what we got from society, to see that the professors come out and really take India to a leading position in the world.
But it's really been a pleasure to have you with us on NDTV Profit. Thank you so much, Mr. Golia, for joining us.
Thank you so much.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
If you're an investor looking to explore immigration programs and options of citizenship and residency across the world, then the IREX Residency and Citizenship Conclave 2025 was where you needed to be. Held at the Trident Hotel in Hyderabad earlier this month, the 22nd edition of this prestigious event opened the doors to investment and lifestyle opportunities across more than 15 countries. The conclave included a conversation that decoded global investment trends and the rise of cross-border wealth mobility.
Hello and welcome everyone. We are at IREX 2025 Hyderabad, India's leading international real estate and immigration show. It's a pleasure to be with all you experienced people on the panel. Thank you all so much for joining us. Let me quickly introduce you. We have with us Mr. Girish Mohile, Vice President, India CMB Regional Centers. Also, we have Edwin John, Director, Business Development, US Immigration Fund. Joining us today is Abhishek Singh, India GCC Singapore, USA EB5 United. Riya Nandi, Director, Investor Relations, India EB5 Capital. Also joining us today, Rishabh Gandhi, Regional Director, India and the Middle East, Civitas Capital. Joining us today as well, we have Arushi Gupta, Managing Director, India Donoso and Partners LLC. And we have with us Mr. Rohit Turkund, member CSG Law. It's really a pleasure to have you with us. Thank you so much for joining us today. I think to begin with, Girish, something which we all want to know, our viewers want to know, the audience wants to know, why should an Indian opt for an EB5 visa program over the the US immigration program to gain USA, residency permanently?
Thank you, Ambika. And this is a very important question from a perspective to understand what EB5 visa firstly is. So EB5 visa is an investment-based visa which allows investors to invest in a qualifying business in order for them to get permanent residency in the US, which is called as a green card. So who is included in one single application? It's the main applicant, spouse, and unmarried children below 21 years of age. Now, what is that qualified investment? An investment needs to go into a qualified business. So it can either be an investment with a regional center or your own business. Mostly people use regional center as their go-to route for achieving their green card via EB5 visa. So you need to invest in a qualifying business. So a regional center's job basically is to seek those investment opportunities which will qualify its investors for EB5 program. Now, what is the investment criteria? The minimum investment is $800,000 US if it falls under a certain category, and $1,050,000 if it falls under another category. So EB5 visa is the fastest route to achieve that permanent residency via investment. Now, this is not a traditional investment where you are looking for a return on your investment. Rather, the main purpose of EB5 visa is to seek that permanent residency and the return of your investment. So if you're investing $800,000 US down the line, once the jobs are created, the construction is complete, you should be able to recoup that capital back.
Shreya, I want to ask you here, since we have so many of you from the regional centers, can you elaborate the role a regional center plays when it comes to your EB5 process? What are the key factors that an investor should keep in mind, personally while selecting a project, and also identifying a credible and experienced regional center, because sometimes investors are confused, which place is the right place for them.
So let's divide this into two. Firstly, what is a regional center? It's essentially a license that a lot of companies hold in the US, and what this license basically does is allows these companies to raise funds in the US in a job creating entity. How does this help investors? So investors work with regional centers who are collaborating with these developers and help them in raising funds in their projects. So in turn, what happens for investors are they invest these funds in these job creating entities, see that their jobs are being created, and against that they get their green cards. What does a regional center do now in all of this? We firstly collaborate with developers, see what kind of projects they are doing, and we say that we're going to help them raise funds in their projects. We are also going to work for investors as a fund manager, wherein we will see that their funds are being invested in the right project, see that all investors, 10 American jobs are being created, because against that you get your green cards. So that is essentially what a regional center does.
Well, thanks, Riya, for that. Edwin, this is where I think you would come in, since Riya's explained the role a regional center plays. Tell us about the types of real estate or infrastructure projects most commonly supported by EB5 capital today.
When you look at EB5 as a category, there are three subcategories to it, right? So you have your high unemployment area, you have your rural, and your infrastructure projects. At USIF, at least I can really vouch about the fact that we are comfortable with working on multifamily mixed-use projects, because we see that there is enough and more demand irrespective of whichever location the project is coming up with. And I'm sure that my industry colleagues also would support me in that each regional center has some or the other expertise in any of the types that they are working in. So having said that, right from the beginning, for the last 15 years, we've done 25 plus projects. We've done projects in all the three subcategories. We have raised projects, capital for projects in a hotel project, a mixed use project, retail, name it, and we've done that, right? So these are a couple of subtypes that we need to focus on. And yes, for us at least, mixed-use multifamily projects continue to remain our go-to when it comes to raising capital from an EB5 standpoint.
Rishabh, how do regional centers safeguard the investment of the investor, or what is the guarantee of repayment of investment?
Firstly, we personally don't like to use the word guarantee in EB5 because, USCIS wants your money to be at risk. As part of our process, as part of your regional center, what we do is we try to minimize that risk, right? So you can divide the risk into two categories. One would be your immigration risk, which is the risk of not getting a green card. And then there can be a financial risk, which is not getting your money back, right? So what we do is we have covenants set in place. So when we are looking at projects, like Edwin just mentioned, multifamily, hospitality, we are very comfortable doing all of that. But what we look at is the ability of the borrower to repay, to refinance, to service the interest to us on time. And when we look at, all of our projects, we look at a very clear exit strategy, right? For example, if a project says, 6 years down the line, I'm gonna, sell my asset at an X amount of value, we just look at the market trends for the last 20, 30 years and see, whether that value would be achievable or not.
Arushi, again, when we're talking about, like we say, EB5 is the quickest way or the fastest way, right, to actually reach America or, get to your dreams. What key strategies can investors, use to ensure that their source of funds documentation is clear? And also, how could they avoid the USCIS delays? Because timeline is something which I think people would really want to know about our audience here.
What can we do at our end to minimize the risk involved in the transaction? And this is where your lawyers come into the picture. Your regional center and the law firm are two pillars of this entire transaction. While one is dealing with investment advisory, the other pillar is looking at the compliance end-to-end to ensure that you receive your conditional green card, your permanent green card, in the right timeline. So at Donoso and Partners, we are based out of Maryland, and over the years, over a decade, we filed over 5,200 EB5 petitions, and consistently what we aim to achieve is to have the most easiest source of funds strategy carved out for our client much ahead of time. On an average, we try and ensure that we complete the source of funds verification, which is basically tracing how did you earn the money and then how are you transferring the money.
Well, thanks, Arushi. Now that we know that the source of fund is important petition, that's where, I come to you, Rohit. I want to know, now that we know about the source of funds taking the step further, how can an investor, really verify that their capital is being used in accordance to the business plan which they had actually submitted to USCIS?
There's a simple principle that I like to tell the individuals. It's your money, it's your green card, it's your investment, it's your risk. Everything is about you guys. The regional center and the attorney are only vehicles to get you to your destination. You owe it to yourselves to do the due diligence. Especially if you're in the US or you have the ability to go to the US and you're visiting a regional center, whether it's Rishabh's or Edwin's or Abhishek's, anybody's, go meet them, go look at the place. Does that actual construction exist? If they're saying they're building something, have they broken ground? What are you seeing over there? Sometimes the regional centers and the job creating entities may be related, and that can create some problems. It has in the past at least. But now with a fund administrator, that should be reduced. There is no guarantee. The word guarantee does not exist in EB5, but you can minimize the risk of losing your money and also minimize the risk of not getting your green card, although you may not be able to eliminate it completely.
Arushi, this is where I want you to tell us that what laws do the investor need to comply with at this point?
Sure. So whenever we are looking at an EB5 application, we are looking at laws in two countries. First, in United States, because you're dealing with United States Citizenship and Immigration Services. So you look at the local US laws. And secondly, you look at the laws in your country of residence. So if you are an applicant from Hyderabad, India, you're looking at the laws, local laws applicable here.
Is there a risk of higher scrutiny or any changes you feel which could happen to the investor eligibility?
I think with the Reform and Integrity Act, they've laid down a pretty solid foundation. It's got a clause for grandfathering. So even if any changes happen, anybody who's filing while this law is in practice, they will be grandfathered under the old law. So luckily, if the program changes and we keep hearing about it over tweets by the President of the United States, but luckily he does not have the powers to kind of change this without a congressional approval, right? So he has to pass this as a new law, and it will still only be applicable after the sunset of the current Reform and Integrity Act, which is in 2026.
Okay, so nothing as of now?
Nothing as of now, yeah.
Okay, thank you. Abhishek, when we look at college, families with college-bound students or children, which pathway ensures the fastest and the most secure transition to permanent residency? Like Rohit had also mentioned, if your children need to go to college, or that could be the right time. So what do you suggest?
One thing I would like to emphasize on the fact that when your children are above 18 years of age, when they are doing when they are in the college, that should be you should be while choosing a project, and you should be very aware of the fact that EB5, right now EB5 is current for India because of certain categories open. The TEA is further segregated into, as Rohit explained, rural category, urban category, and high employment area or urban or infrastructure categories, which has visa set aside. So in spite of having India backlog, you are skipping that particular backlog and visas are made available to you. But like, every other queue where Indians are involved, this particular queue is ever forming. It's getting longer and longer. And there will be a time when there will be a priority date on each of these categories or some of these categories. So you will have to assess with your immigration lawyer whether with the age of your child, who should be the main applicant.
Yeah,
that is the most important thing, because you are trying to, if you are trying to cover all your children, if they are not in the US and you are you are not filing for concurrent filing, then it becomes a issue if there's a retrogression in picture after some time and there's a priority date which may, one of the child or anyone can be aged out. So that is something that should be kept in mind.
From luxury homes in Dubai to US citizenship through investment. The global opportunities for international real estate and immigration by investment are expanding. We'll be back after the break with more insights.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. 1 of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Welcome back. The recently concluded Hyderabad edition of the IREX Residency and Citizenship Conclave saw the participation of 20 plus leading real estate developers and immigration by investment companies from around the world. Reflecting on the evolving mindset of Indian investors, we now feature an exclusive fireside chat with Mr. Girish Mohile on what truly defines a smart global investment.
Welcome back. You're watching IREX 2025 and we have this interesting fireside with Mr. Girish Mohile, Vice President, India CMB Regional Centers. I would like to tell our viewers that CMB Regional Center is one of the oldest regional centers in the US. Thanks, Girish, for speaking with us on NDTV. To begin with, if you can tell us, what is CMB Regional Center's main business?
Thank you so much, Ambika. So CMB Regional Center's main business is to act as a fiduciary on behalf of its investors. We specialize in EB5 visa. It's an investment-based visa which allows investors to invest in a qualifying business, which will allow them to get a green card or a permanent residency for the US. It includes the main applicant, spouse, and unmarried children below 21. So what CMB really does is we source projects, we work with different developers, and we analyze the projects whether the investment which goes into those projects will qualify those investors for EB5 or not. And then we allow them or open them up for investment to our prospective investors. The minimum investment amount for EB5 visa is $800,000. That's what we function in. So we mostly have projects which are in a targeted employment area, which allows the investment amount to be reduced to $800,000. You can probably start your own business, but you need to take care of the job creation yourself. You need to invest the money into a qualifying business with an investment amount of $1,050,000. So what we do really is to simplify the EB5 process. We differentiate the goals of each of our investors, where the primary goal is to secure the green card and the repayment of the investment that they do.
It can be pretty confusing, for an investor or an individual who's first trying to figure out, what they want to do, when they want to go. So are all the EB5 regional centers the same, or does the choice of actually choosing the correct regional center actually make a difference?
The answer is yes and no. It's a bit nuanced. The reason being, regional center is a designation. So any entity who qualifies as a regional center can essentially operate in this space. What differentiates every regional center is the way they function in the market. If I have a regional center designation, but I don't really actively work in this environment, but I do have that designation. So a developer comes to me and says that, hey, you know what, I have this project, I want to raise EB5 capital, and you have this designation. I don't have time to apply for my own, so would you rent this designation to me? And there are regional centers who essentially take no due diligence efforts from their end, but they just rent out their regional center designation to others. The second point and the most important point is to analyze the history of that regional center, because that's the simplest way where you will be able to understand how that regional center functions and in what manner they have those set standards to conduct due diligence on the projects that they have onboarded, and what asset classes they have worked with in the past, which developers they have worked with in the past. And that is how you will be able to zero in on a specific regional center and a project.
Okay, so now lastly, I'm going to quickly ask you, three most important points when it comes for an investor to keep in mind before they go in for the EB5 visa.
The first point is to finalize whether you want to go forward with EB5, whether your dream is to live permanently in the US or not. Secondly, whether the project that I'm investing in, whether I'm rushing into it, someone is just marketing it, oh, this project is going to be over in 2 or 3 days, and you need to take a call right now. Not the right way, in my opinion, because at the end, you're putting your hard-earned $800,000 into that project with that regional center, trusting them with your hard-earned money. So I would not rush into anything. I would conduct due diligence. I would ask as many questions as possible. There are many regional centers who are going to have a subsequent project out there in the market. So I would not rush. And third and most important is to analyze what exactly you're looking for in terms of timelines. Now, as we discussed in the previous panel as well, that there are projects which are in high unemployment area with a better or greater track record. There are rural projects where we are yet to see the track record in terms of repayment of capital, but there are certain situations where you would want to take that additional element of risk because the project makes sense. So every case, it's not one size fits all. You need to take that call on your own. An informed decision needs to be taken by the investor themselves, and do not get forced into any kind of timelines or investments.
I think really well explained. While the EB5 visa could be the fastest way to someone, for their dream, if they want to be in the US, and the law firm, obviously, and the regional centers play a critical role. But I think equally important is that the investor himself, like you rightly said, does due diligence and needs to know whether it's, why he wants to go and has all his answers in place before.
Yeah. Due diligence is the word of the day.
Yes. Thank you so much, Girish. It's really been a pleasure to have you with us on NDTV.
Thank you so much.
Indian market has always been a very good market. Indians are progressive people, and as you know that in the US we have a big Indian diaspora, and there are a lot of people from India who go to US for studying, and they would like to, after studying in the US, they would like to work over there and look for a guaranteed and a stable future. So India has been a good market always, and I believe that it will remain to be a very good market.
India market is also doing quite well, especially students and H1B folks who are already in the US are opting for EB5 visa. So we are speaking with parents, main applicants over here as well, and there is certainly a more demand when it comes to EB5 visa currently in India.
We at IREX are here to promote and educate investors about the EB5 program. As Indians, we always want to look at various options before we finalize on a particular investment opportunity, and keeping that in mind, we brought all of these programs and projects to the Indian community.
We have different projects that an investor can look at, projects based out of a rural area, projects based out of an urban area. Depending on what they require, we have different kind of projects offered to them. So I've been coming for IREX for over 5 years now, and we've been to multiple cities where IREX is hosting events, and it's been great because I get to meet so many prospect investors, agents who would like to help investors move with their EB5 prospect. So it really helps connecting with a lot of people who are interested in EB5.
We assist individuals, in their journey of the US green card. So we basically help, structure projects, and these projects qualify as per the USCIS regulations for the EB5 investor program, which is the shortest and the surest way of getting a green card. What I really like about our offerings is, we understand that, these Indian families are very, very conservative, and, they want this capital back. So we try to mitigate this risk by doing a lot of multifamily senior lending projects. Even on the hospitality side, they're always looking to be the senior lender because we have the first charge on the asset, and that allows us to kind of, mitigate the risk. The risk is there, but we try to reduce it as much as possible. So if you look at the Indian market in specific, a lot of Indians are looking to get the residency option. They're not willing to let go of the Indian passport, but they're looking for options where they can have ease of business. Dubai is probably a place which helps people set up their own businesses. It's a tax-free environment. So we are providing a platform where people can invest in our projects where they can get guaranteed returns.
Well, if you see in Dubai, almost the entire Dubai population, 38% is owned by Indians. So we know that Indian market is dominating, and not just in Dubai, but globally. So we know that it's the right people, doing the right investment, which is Dubai. I am so amazed because globally recognized companies are over here, and I am experiencing and exploring every aspect of it, which is so great and good inputs for all the people who was over here. Even I learned a lot so much over here.
As international real estate and citizenship by investment options grow more accessible, Indian investors are shaping a new global narrative. From diversification to lifestyle, the IREX Residency and Citizenship Conclave 2025 was a gateway to possibilities. Until next time, keep exploring, keep investing.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसा हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire dabba trading scam.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
In 1937, the Notandas story began by crafting fine jewelry, shaping a legacy of elegance and luxury. In episode 1 of Dreamers, Builders, Disruptors, we saw Vandana Jagwani carry this forward with bold, unique designs. Harsh Jagwani, however, chose a different path, entering the challenging world of luxury real estate. Under his leadership, Notandas Realty transforms Mumbai's skyline with projects like the 96 Tagore, delivered ahead of schedule and known for its innovative design and quality. Welcome to episode 2 of NDTV Profit, where we get a closer look at Harsh's journey.
I'm Sanjana and you are watching Dreamers, Builders, Disruptors on NDTV Profit. Today we have a special guest in our studio. He is a true maverick who has carved his place in the fiercely competitive world of real estate. Coming from a family legacy steeped in elegant jewelry since 1937, he made this very bold transition into luxury real estate, crafting bespoke residences and iconic landmarks. So without further delay, let's welcome Mr. Harsh Jagwani and uncover the story behind the spaces that are shaping Mumbai's skyline. Thank you so much, Harsh, for joining us and welcome to NDTV Profit. I'm going to ask the question, rather address the elephant in the room. Stepping into luxury real estate was obviously a very bold departure from your family's storied jewelry legacy, right? So what inspired you to take this leap and, what personal motivations drove you to choose such a different path?
So basically, I've been born and brought up in Bombay, right?
Yeah.
Bombay being a market, every person probably living in Bombay has some kind of investment or something to do with real estate.
Sure.
Maybe their house or their office, somebody does something like that.
Yeah.
When we were growing up, we did invest a lot with developers, saw the entire industry. Lost some money, made some money, but that's how I think most people in the city work.
Sure.
Then we started building buildings as my father started building, My father started building a few buildings one at a time. Just as an investment kind of strategy. We would build a building, retain most of the commercial inventory within it, and then sell a few apartments or a few of the offices and move on.
Sure.
We took it full-fledgedly when I came back from college and he had more hands. So my sister looked after the jewelry and I started looking after the real estate bit. That's when we went completely into the development kind of a mode.
Got it.
And the luxury part of it, we were always into the luxury space as such, because we do, jewelry's been there since maybe 80 or 80 years maybe now.
Yeah.
And we only do luxury jewelry as such. So this was not that much of a thought process difference, I think, compared to what we were already doing.
Correct. So, as a representative of the Notandas legacy, how did you navigate the personal challenges of carving your own path into an entirely new industry? You are telling me that, of course, there was some background, there was just some understanding that your father had kind of broken it in a little, but I think what you did was just come in and take the reins completely. Were there any moments of uncertainty that you had to overcome?
No, of course, quite a few. Yeah. So I call it lucky and unlucky at the same time. So we were very lucky that I got a full free hand to do whatever I wanted to do.
Yeah.
When I came in, probably we had one employee in real estate just handling older assets.
Yeah.
Nothing in development per se, old assets held, just the management of those assets. And then today we are about 95 people strong in over 3 years now, I think 3.5 years. So at least I got the opportunity. I had the basic understanding.
Sure.
This is your consultant, this is an architect, this is a licensing architect, this is a structural consultant, but I had a complete free hand how I wanted to move. So we made some mistakes. I also found good mentors in the due course to at least help me out, and a lot of questions were answered. Very, very helpful people I met across the timeline.
Lovely. And I think making mistakes is a big part of succeeding in any business, as long as you don't look at those mistakes as failures, right?
No, of course. So you cannot look at it as a failure.
Yeah.
If you go on, it's not failure anymore. It's just a mistake and you move on.
Absolutely. Absolutely. So, we spoke earlier to your father and asked him how he reacted when he first got to know about your plans to strike out, okay? And how he sees your vision carrying forward the Notandas legacy of craftsmanship and luxury. So let's hear what he had to say.
So as Harsh, as soon as he came after his education, finishing from UK, and in fact, even I was also waiting for somebody to join, and then when he came and expressed his ideas, and of course, then in fact, I took his support, and we both got quite aggressive with his ideas to expand the work, and touch wood, in a couple of years we've been really achieved the kind of in real estate a very good level of work what should be more than the expectation. He's proved himself also to be on the ground. So proud? It's a proud movement. Both the kids touch wood have been quite very successful the way they have thought. In fact, as I told you, that's why the reason today I don't tell them no for anything. Whatever ideas they come up, they're open to, and they are doing a good job for the brand.
That's endearing.
He seems a lot more enthusiastic now than a few years ago, but yeah.
No, No, but tell me a little more about that. Was he not as enthusiastic a few years ago?
I mean, we came back also young, and he's of course enthusiastic about business in general.
Correct.
But again, to again restart an entire journey, and then you want to be a part of it. Not, it's a lot of real estate also very capital intensive as a business. Any bet we take is a very large bet. As such. So of course you have that. Not, I wouldn't say nervous. You don't have nerves, but hesitant, of course. But of course, once one does well, second does well, you start building confidence. So now he is. Now sometimes I pull him back. Yeah.
But let me scratch the surface further. What's it like working with and for your dad? Did you always know and think that that would be, you know, the path that you would carve out for yourself?
So it's really funny, when I started in real estate, we had maybe one project, so it was very, very hands-off.
Right.
It's like, you know, you do yours, doesn't matter on the entire ecosystem, does well, doesn't do well, you figure it out your own manner.
Correct.
Then the second came, third came, fourth came, eighth came. Now it's probably a very large part of the entire ecosystem of Notandas, the group in terms of that sense. So now he's, of course, more hands-on compared to he was 3 years ago, which is usually very rare. Usually it is that, you know, there's a father and a son, and then the son joins, and then slowly the father starts moving out. Here he's been moving in year on year because there's so much more happening in terms of action.
That's actually quite nice and very interesting, even for a father-son dynamic, right? In and out of business. Okay, so Notandas Realty is known for bespoke residences and iconic commercial landmarks. How are you infusing the same creativity and really the uncompromising luxury, right? The brand is known for that, from jewelers and, you know, the vandals into your real estate projects.
So I think a few qualities which most developers have and we don't. It's not a good or bad thing. It's just generally.
It's okay. Just an observation.
Just an observation. I think attention to detail. We're not doing massive projects, which is 2 million square foot, 3 million square foot, commoditizing real estate in general. Of course, everyone makes money and everyone's business model is different. So we like to do boutique developments, maybe about 2 lakh square foot, 3 lakh square foot, 4 lakh square foot, where quality can be controlled. We actually go out and put attention to detail in every corner, every clubhouse, every toilet, every corner as such. So it is very hard to do it at a larger scale. We rather do it in multiple projects where there's a project lead and they do it in that sense. But doing 3 million square foot with attention to detail is not impossible for us also. It's not even possible for us, sorry. So that's where we kind of think there's a differentiating factor.
Right.
Also,
just like designing jewelry.
Exactly.
Okay.
Just like designing jewelry. And then the second aspect is that I personally, it's a good or bad habit, we don't look at costing at all. We do look at costing, but everything always runs over cost. Because if we like something, we travel, we're in Dubai or Singapore.
Correct.
We like some kind of facade, we like some furniture, we click pictures, send it back to Bombay.
Yeah.
We like, source this is something new we've seen. So most, very passionate about it in general.
Right,
I think so.
Right, absolutely. And I think it's only when you really push the boundaries and take those kind of risks that you're then able to really see that vision convert into reality, right? Okay, so, you know, talking of vandals, we also spoke with your sister Vandana about, you know, your shared passion for creativity and shaping the future of the Notandas legacy. So let's listen to what she had to say as well.
So one of the most beautiful things is that we all have a very similar vision and goal in life. First though is we want to do good, then we want to scale, and before that we want to respect everything that is given to us. That was our upbringing. We have all different styles. That's a blessing, because then we fill each other's gaps. We don't all think the same. If all thought the same, that would just not be nice. Then wrong to wrong sab, right to right sab. So all four being completely different in their styles and approaches, but always having a common feeling is our one good thing in life.
Do you give each other advice, business advice?
Yeah, of course we do. I call it productive friction. Because that's when I think true creativity comes out. We have such different thought processes in general.
Yeah.
We try to find a midway. We don't fight like crazy that no work happens.
Correct.
Everyone has their own control of various things that they do.
Yeah.
But of course, we do fight tooth and nail that you should understand my point, get what I'm saying, then take your calculated decision.
Correct. Just like probably what you would have done when you were children as well, right? And I think there's a certain amount of trust that you also have when there are siblings also involved in that equation, business or otherwise,
No,
right?
of course, definitely.
Yeah. Okay. So what specific challenges did you face in building credibility? Because, you have a jewelry legacy and trust in the real estate industry coming from a family that's well known for jewelry craftsmanship. Did you face any kind of pushback or any kind of challenges?
So I'll tell you honestly, when I joined, I had no trust in terms of no trust deficient in terms of a brand name. Everyone trusts the jeweler.
Correct.
Nobody trusts the developer. So that was kind of lucky for me specifically, that because the jewelry legacy was so old, clients and vendors and everyone really supported me in that sense. But the flip side was again age. When most people come to buy apartments, or if I sat down with landowners, they're probably 55, 57. You want to offer them a large number for their land or for a joint venture. And they're like, who's this kid sitting in front of me? Where is his father? Call him and this thing. And I told you in the initial years, my father was also very, very hands-off.
Correct.
Right? Even now, is quite a certain extent.
Yeah.
So I would go one round meeting, second round meeting, third, and they're like, where's his father? Why isn't he coming? There have been a couple of transactions only come on the last day for a handshake.
Yeah.
Right? So then like, okay, now you get a face to the name. This is what is happening. So I think the major challenge was there in terms of age. I think now since we've got older, I think that pretty much, I'm still young for the industry standard, I believe so. But I think over time, that's how personal credibility got built over a few projects.
Correct. And how do you think that you overcame that earlier, like that aspect of being taken seriously? Because I think that's across the board and we're seeing so many young entrepreneurs today. So I'm curious to understand if you had like advice to give, say, other young entrepreneurs who are struggling to be taken seriously or feeling intimidated in, rooms where there are very, very senior people, what would you say to them?
I think if you know your stuff, just go ahead and continue doing what you're doing. If somebody doesn't appreciate it, maybe you don't want to do business with them as well.
Yeah, I think that's good advice. Yeah, for life as well, right?
Welcome viewers. This is a call for Disruptor show flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात, खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular.
Okay, so looking at one of your standout realty projects, how did you channel your vision for architectural mastery to create something that's truly iconic, and what would you say was the defining moment in this entire journey?
So I wouldn't point out one particular project, but generally when we are developing a project on day one, when we're on a blank slate, every project since it's luxury, I would never build anything I couldn't move into. We relate to a lot to our clients. So now, of course, it keeps evolving. Our own tastes keep evolving. I would not build anything I couldn't move into in terms of luxury or spatial design or just planning in general. That's one major aspect I look at. Also, we go out and see what people are calling luxury in that market. And we, of course, want to push the envelope from there. So that is whatever we are planning is maybe on a bare minimum 20% more, I wouldn't say superior, but we tried our best to put more things into it so our clients are more happy and they're actually proud of the development they move into in the future.
Right. That's a good approach to have, I think. And that's not just, in your business. I think in most businesses, you really need to consider and put yourself in the shoes of the audience and the consumer. What would you say is your vision for Notandas Realty in the next decade? Are there plans to push the boundaries of real estate luxury and perhaps in other Indian regions or even global expansion?
Yeah, I think so. A decade is too far, honestly.
Good. I like this tenacity.
So that a decade is too far, but definitely the way the income brackets in India are changing and then the global exposure Indian clients have now, so many of our clients are just the general population. I really think luxury is here to stay for a very, very long time in India, and just the general preference what people could sell as luxury in the past is not going to pass off.
Correct.
People are exposed to global landmarks, they go live in Dubai, look at the buildings there, they go live in Singapore, London, things like that, and we don't even, and honestly, even though we build here, we don't even have 25% of that kind of organization or quality or structure here today, I think so.
Correct.
So it's a long way for us to go, as such.
But you'll get there.
Definitely.
Okay, so I'm going to switch the gears now for a realty vision round. So maybe a swift, precise, rapid-fire answers to highlight the strategy behind Notandas Realty. Okay, so I wish there was a hamper at the end of this.
Yeah,
Okay, one word to encapsulate Notandas Realty's mission.
It would be pushing the envelope. It's not a word, but I was just trying to...
A phrase. Okay, we'll let that pass. Design, location or sustainability, the cornerstone of a luxury project.
Location. I would say developer, but location on your options.
Your go-to strategy for overcoming a market challenge.
Just keep doing what you're doing. Persistence.
Nice. Name a global city apart from Mumbai you would want to build a project in and why?
I think Dubai now, just their policies and the creativity they have, I think it would be fun competing in that market.
Yeah, sure. The most valuable lesson you learned after starting Notandas Realty?
It would be challenges keep coming, keep moving on. Although you have everything, still you have challenges on a daily basis.
Nice. Partnership or innovation, what fuels real estate success?
I think partnerships.
Partnerships.
Partnerships,
okay.
Definitely.
One trend poised to redefine luxury real estate?
Again, I'm repeating, I think quality.
Okay.
Quality.
Okay, lovely. Thank you so much for your time. And I think you did really, really well.
Yeah, for the first time.
Yeah, fabulous. So well done. You're a veteran now, essentially. From jewelry to real estate, Harsh Jagwani and the Notandas family show us how creativity and uncompromising luxury create timeless legacies. From Mahesh's craftsmanship to Vandana's bold designs and Harsh's architectural mastery, the Notandas story is one of fearless innovation. Thank you, Harsh, for sharing your journey, and stay tuned for more stories of legacy and vision.
Today, we explored Harsh Jagwani's vision reshaping Mumbai's skyline with Notandas Realty's innovative projects. But the Notandas name has stood for fine jewelry, a legacy of elegance and luxury for more than 80 years. In episode 3 of Dreamers, Builders, Disruptors, we meet the OG, Mahesh Jagwani, who has kept this legacy alive. His bold leadership transformed Mahesh Notandas into a beacon of craftsmanship, inspiring a new generation. Join us on NDTV Profit to uncover Mahesh's journey and the heart of the Mahesh Notandas story that continues to create luxury.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको?
Kenneth, I would love to know if you reckon that the markets, the cycle that we may be in, because I know you study business cycles, you study market cycles. Are we at a point of time in the cycle wherein the chances of the cycle continuing positively are higher, or is it the other way around?
Okay, firstly, business cycles, and I hope market cycles follow the business cycles. Okay, so from a business cycle point of view, we've been at this place for a while. Okay, it's the best you've ever seen, and hopefully the best you'll ever see for some time, right? And I've been on multiple forums, including having conversations with you on where we are from a financial standpoint. Okay, corporate India is at its best ever, etc., etc. And I don't know if it can get better from here. Okay, but one thing they refuse to do is reinvest back into the cycle. Okay, and that's becoming a genuine problem right now. It started showing up. It started showing up for the last 2 years. Even 2025 over 2024, you had a single-digit growth. 2024 over 2023, you had a single-digit growth, and this year doesn't look any significantly different. Of course, you have a couple of companies here and there that can pull a rabbit out of its hat once in a while, but I think unless you get back to a capex cycle, more so a private capex cycle, followed by whatever the government's doing, we stuck in that point wherein single-digit growth and very high valuations for the kind of growth you drive.
Okay, and so Kenneth, it is very difficult to maybe hypothesize what will it take for corporate India to start investing, right? So does an investor wait for that turn to happen at some point of time to take advantage of a full-blown capex cycle, or does the investor move his vision elsewhere?
So let's look at it from an investor perspective, right? I don't think you're going to get significant out of the fixed income market. Okay, it's very tight in terms of where yields are right now, and I'm not too sure that we're prepped for another rate cut given where the global macros are, right? That's one. Second, if you go back to equities, and if you look at equity valuations in a very different perspective, if you're at 22 times earnings, or even 23 times earnings, 23 times earnings, you're at about 4.5 times cash flow yield, earnings yield. And if you look at earnings and all of that is becoming cash flow, you're at 4.5%, which is equal to where your bond market would be. Okay, and you hit parity out there. So between equity and fixed income, I don't think there's too much of a choice out there, which is where you've got alternative assets doing reasonably well. So I think that's what the choice is left with an investor. So there's no risk on capital from here. I don't think there's a risk on capital from here, but you've got to lower your expectation on returns. Okay. If I look at a 5-year compounded or a 3-year compounded or a 2-year compounded, that's as best as you're going to get for a while. Okay, I don't think it's going to cross that in a hurry so far. And you hopefully consolidate around this period of time. Okay, because if your broader economic parameters or broader growth rates are going to be single digit, to expect a company or two to become growing significantly faster than that, I think that is behind us for a while. Okay, so that's what an investor should do, and that's what an investor should look at. Wait for a period of time, see how it works out. Now, the capex cycle is also a little bit of a. It will come. In what shape and format, I don't know. It will come, and when capex actually comes up, it's usually followed by first free cash actually getting absorbed by the capex. Plus, then you leverage up your balance sheet also, right? So there's a new element of it all, which is debt coming in. And when you have a cycle like that expand itself, valuations tend to tear downwards. So your 23 times have to go to 20 times and 18 times and 19 times because there's a new participant in that EBITDA, which is interest cost, which is where the debt picks up. So I think we're stuck in that right now. Right now, no capex, elevated valuations. If capex comes back, you will get growth, but you'll still have valuations that would erode a little bit. So you're stuck for a while in this zone, and you'll have to go, and you will really have to go stock picking to find an opportunity out there. Okay.
Got it.
So the market, my sense, has to get very narrow. And extremely narrow before we can see any signs of a full-blown revival all over.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. 1 of them went ahead and built this ecosystem. And yes, we had a parting of ways.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. 1 of them went ahead and built this ecosystem. And yes, we had a parting of ways.
Welcome to this very special episode of The Disruptors, and today we're talking to a man and a product that has become a huge part of all of our lives, especially if you're an air traveler. Now, when Digi Yatra was first launched as a concept, there were more questions than answers. People wondered whether their data would be safe. People wondered why the government wanted face biometrics, what it would mean. But over the years, it's become very clear that if you're not on Digi Yatra, you must be prepared to spend a lot of additional time going in and out of large airports. As this product and its use spreads over Indian air travelers, we have the pleasure to speak with the CEO of Digi Yatra, Mr. Suresh Kharak is with us today in our studios. Thank you so much, Mr. Suresh, for joining in.
Thank you, Tamanna, for having me.
Yeah, let's start with the origin story of Digi Yatra and your own journey as well. You've not always been in the airline business. You're more in the telecom tech space, isn't it?
Yes.
Yeah.
So I started my life journey or professional life journey as a maintenance engineer. I used to repair fax machines, install trunk mobile radio systems. So primarily in the telecom industry, and then from there I moved on into various different roles, simulating equipment for networks, and then eventually I moved on to airports. So that's been my professional journey. But yes, I think when you start to look at your life, right? During my childhood days, we used to have these. Came from a very humble sort of family, right? And we used to rely on rations, and the rations used to be like, once in a fortnight or once in a month, we used to get those rations, which is rice and wheat and kerosene, for example, right? And we were in Mumbai suburbs, so these stocks used to be like, used to come once in or twice in a month. Whenever the stock would come, we would get the message and then we would run. And my mom used to tell me, go and stand in the queue immediately. So we used to run and stand in a queue. So now my point is, queues is something which I think every Indian is used to, right? And this is from my childhood days I've been seeing. And as I grew up, so application to my college, right? Again, long queue. To even collect the application form, there is a long queue. Electricity bills, we used to stand in queues to pay electricity bills. And then, of course, professionally, when I started, when I entered the airport aviation industry, again, it's the same thing, right? And this is what was something which I felt, should not be, right? I mean, why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began.
I'm just going to go back. What a fascinating idea, and think about it, it's true. Indians as a people are attuned to stand in queues from birth to death, I would say. You have to stand in someone has to stand in a queue for your birth certificate, someone has to stand in a queue for your death certificate, for your school leaving, for any forms that you have to fill.
Yes.
Wow. And you've come from this background where, you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
I think it's been a long journey, right? Professionally also, it's been a long journey, and I've not done any shortcuts. It's like always, it's a gradual sort of a linear growth that has happened. And this was some time back when I was in Bangalore International Airport. We were thinking of a new terminal. And for this new terminal, we had this workshop, a 3-day workshop, where we were asked, right, to write a memorable journey experience for the passenger at the new terminal. And everything was like conceptual. in nature. And I wrote this very simple story saying that, passenger just walks through all the touch points and nobody stops him or her for anything and just boards the flight, right? And this was a concept which was based on the face as the single token. We used to call it at that time as my face is my boarding pass. And of course, easier to say than actually execute, right? Because the whole aviation industry has got disparate sort of elements, disparate sort of validations to be done, identity validation, travel document validation, many other validations which happen, right? And all these are from different ecosystems. So how do you get everything stitched together and then still make it happen and give a memorable sort of an experience? So this was a difficult task. We started off working on this with biometric vendors.
No, one second. Let's not jump that queue. So you submit this concept, but there is someone at the other end who has to look at this and say that, okay, this is something that we can actually do. This is not a flight of fancy.
Yeah.
Who's that?
Yeah. So the concept anyway, I was from the IT department, right? And this concept was put up and people were asked to vote for this also, right? We were given some limited votes, all the participants from the workshop, and we got some 6 votes, 2 of them mine and my colleague, right? So we didn't get enough number of votes also. But the whole point is that, we were all like, and at that time I would say not just Bangalore, right? All the other airports also, Indian aviation is like growing at a phenomenal pace. And everybody was looking at solutions to ease this whole process, the friction in the process, and make the airports more efficient. And I think from that perspective, I started to work on, okay, how do we make this happen, right? And since I was in IT, passenger processing was part of my sort of delivery also at that point of time. So we started to think of stitching this story together.
No, so coming back to the point, how does this become a government initiative? Because right now, Digi Yatra, I think 25% is owned by Airport Authorities of India. And then there are 5 or 6 other airports who also have shares.
Yes.
And it's a private company. This, a lot of people might not know, but Digi Yatra is a private company. But the government has allowed it to happen or facilitated it. So how was that connection made?
So first, when we conceptualized, the next step was to do a pilot, because the proof of pudding is something which is important, right? People need to actually experience it, and then I think they can make up their mind. So what we did was we said, okay, conceptually it looks good, but let's actually attempt doing it with passengers. And we did a proof of concept in 2017, and that time it was with Jet Airways. We used to do 1 flight every day. And I used to be with the passengers right from the airport entry to the boarding gate, and I used to take their feedback, candid feedback with their consent, right? Asking them, what do you feel about this process? And there were a few passengers who said, why only 1 lane? Why only for 1 flight? Why not do it for all the lanes, and why not all airlines, and why not all airports? And that's when we started to get the ministry also involved. And at that point of time, ministry also was looking at something which can ease the passenger journey. And when we brought them to witness this whole process, they said that this has to become like the suo motu standard for passenger processing across India. And then we got everyone together, and this was an initiative which was headed by the Secretary of Ministry of Civil Aviation. And then under the Secretary was the steering committee, which was the CEOs of various public-private partnership airports and the Chairman of Airports Authority of India. And then under them were people like me who were subject matter experts. We called ourselves as the Technical Working Committee. And we started to then do brainstorming workshops, ironing out the processes, various stakeholders, right? The security, CISF, Bureau of Civil Aviation and Security, the IB, even from a data security perspective, all these stakeholders had to be convinced that, what we are doing is something which is going to take care of all your requirements as well, while still providing a superlative passenger experience. So then I think it took almost a year plus for us to bring all the minds together and get something which is
But frankly, in the time it takes for government typically to decide something and execute something, a year is not that much time at all.
I agree.
Yeah.
Yeah.
So this is what happens when a tech-backed idea meets policy support. And that's when you see something like Digi Yatra you're rolling out, because you need to have the buy-in from the CRPF, you need to have buy-in from the airline, the airport, everyone, right?
So I think where we won the game was we had everything. We had a good point for all stakeholders, meaning that a value for all stakeholders. So if you look at airlines were at that point of time, right, everything is happening manual. So they would not know how many passengers entered for a particular flight, whether passengers have actually crossed security check or not. They may be at final call and they may be looking for a few passengers, right? They would get this awareness. Security, for example, if CISF, if you are to look at the actual role of the CISF, looking at your documents, right, it's a very complicated sort of a thing. So we have taken away all that burden and we have said that, all these things, let it be done in a digital manner. So the identity validation happens digitally with this face-to-face match. The travel document validation happens with the airline departure control system. Everything is digital. So the pain is taken away, and then also the human error, right? And you look at today's technology, right? I mean, you can forge an identity card, you can forge a boarding pass or a travel document, and no human eye can detect, right? All that is now out. You can't forge this because you can't, the validation of your identity happens directly with your Aadhaar. So you can't cheat that. Your travel document, when you are entering the airport, your boarding pass gets validated with the airline departure control system. So again, that you can't beat or cheat. So I think from that perspective, we have taken away pain from each stakeholder, and therefore everyone is like, sold on this, and we have got people who swear by Digi Yatra, I would say.
But it wasn't the case right in the beginning, wasn't it? There were a lot of questions on safety. Why should I give my biometrics to a government agency? Because, this was being rolled out and the communication at the front end was from the ministry, right?
That's true.
So why should I give my details? What will my face ID be used for after this? And you had for some time that pain to convince people to adopt this.
Yeah, I think it was more about people understanding how the ecosystem is built. And we are not like the typical central identity management platform, right? There is no central identity management platform at all in Digi Yatra. Everything is decentralized. And the whole concept is called as self-sovereign identity, which means that you, as a holder of the data, have got complete power over where you shared the data, when you shared the data, what is the data that you shared, everything, right? It's in your control. And the other thing is it's with consent driven first, meaning that we take consent. We also tell you the purpose for what we are taking these data points. And then once that purpose is achieved, which is you crossing through the airport, then this whole data gets purged. And how do we ensure it is purged? We do certain empaneled agencies who do audit of the various airport verifiers. So from that perspective, you are reassured that none of your data is being misused. And then, yes, I do agree that, there were people who had doubts about, I mean, this is perhaps another surveillance sort of a
Correct.
thing.
And in our country right now, everything turns political.
Yeah.
So I think even the initial phases of Digi Yatra and the conversation was very political. That why is our face being captured and what will be done with it?
Correct. So, and I'll tell you examples, right? And I saw on Instagram, there is this one video where, this person is like, vocally, vociferously sort of, saying that, say no to Digi Yatra. And he is speaking. His Instagram handle has got his name, etc., etc. People know him. And he's giving a live sort of video shoot at the airport, saying that say no to Digi Yatras, you have a choice, etc., etc. It's not that we are forcing passengers to enroll. It is a choice that you have. And the whole ecosystem is first of its kind. And I'm actually very glad to say this, that we are the torchbearers, global torchbearers of self-sovereign identity implementation, right? And this is not done at this scale, this volume, anywhere else in the world. We've got so many other countries, continents trying to get into this sort of a process. It's a privacy by design ecosystem. And what we have tried to do is this conception or the misconception, right? We need to change. And from that perspective, we have started doing various campaigns on social media.
No, but let me come back to the point about that you don't store the data. Yes, all of the new data is erased, which would be your PNR number, what flight you're going to. But your face and the image of your face is in the database. That's how you use
So
it
it's
every
not
time.
in the database, it is in your phone, right? Meaning that, that face and your name, all the other data points are in your phone as a verifiable credential. It's in your phone in a secure wallet.
Okay, so it's
Right.
not on a cloud where someone else
It's
can
not at all.
access it.
No.
Yeah.
So we process the data. Once we create the credential, what we do is we put a signature on the credential. Now this signature is used to identify that, okay, this credential has been issued by Digi Yatra Foundation. So the airport verifier knows, okay, fine, this is a known issuer. Second is, there is also a check on the credential, which is that if any tampering is done to this verifiable credential, we have a proof value which gets validated. So I issued a credential with this proof value, and now whatever I have got from the user is not that same credential. It's tampered. So it's a tamper evident ecosystem also. So we say it is a privacy preserving ecosystem. It's also a tamper evident ecosystem, and it's completely secure, end-to-end secure, encrypted.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency, you acted quickly on it. Tell us about that part of the journey.
So this was some time back when we decided that, okay, we need to build the Digi Yatra ecosystem. So before the pandemic, we had said it will be a central identity management platform. And we went ahead, rolled out an RFP, selected a partner, and once we were able to sort of place the order, pandemic hit us, right? And travel came to a standstill. And then we had to relook. We had to relook at multiple aspects, which is from the financial outgo, all those aspects we had to look at. And while we were doing that, I was also part of the IATA's One ID advisory group. And in that One ID advisory group, we were talking of self-sovereign identity and decentralized ecosystems being rolled out. So what we did was we said that, okay, while IATA keeps on setting the standards, here is something which is perhaps possible for us to deploy. And even self-sovereign identity at that time was in early nascent stage. And there were no big players who would do it. So we said, okay, let us run a startup challenge. And we ran an Indian startup challenge with the help of Atal Innovation Mission and Niti Aayog. And we ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. 1 of them went ahead and built this ecosystem. And yes, we had a parting of ways. And now we are managing it completely by ourselves.
You tell us about the parting of ways. That was the important part. जो आपने बस 3 word में बोल दिया. वो हिस्सा बताइए.
So I think for us, I think it's already something which is there in the news media. I don't want to speak much about it, but the point is that yes, this was a concept which was provided by us to the startup. In the innovation challenge itself, right? We had put up this whole concept of self-sovereign identity, W3C standards, verifiable credentials using decentralized identifiers, etc. The whole concept was put by us, and then yes, one startup built it. There were 5 others who were willing to build it for us, right? But any which ways, I think what we have now done is we have started to manage completely on our own.
Correct. No. So these hiccups are likely to happen right at the start of this kind of a journey. What is coming next is my question, because I think for anyone who's traveling on Digi Yatra, and this is what people say, that if you don't have checked-in luggage, it's great. If you have a carry-on bag, then you're in and out very, very quickly, maybe 15 minutes to your gate. But if you have to check in your baggage, then you're back in that same queue that we were talking about. What is the solution there?
So when we defined this whole journey, right, so it was airport entry, check-in, which is your baggage drop, and then security check, and then boarding gate, and also lounge access, for example, right? Those were all the logical progression steps. And the other was also automated border control, right? So the check-in part of your baggage, right, I think some airports have begun to do the initial trials, and where you can actually stand in front of a kiosk, print a bag tag, tag your bag, go to the self-service bag drop, and drop your bag.
It'll all be on the same
everything
Digi Yatra
on the
platform.
same face as the single token. But this is a graduated sort of a step that is being taken by airports. Some airports have already begun doing these tests and prototypes. And very soon you will find that even that touch point is completely
What's the
biometric.
timeline? By when do you think this becomes a reality?
I
at least
cannot,
at your
at this stage, I cannot give you a
major
timeline.
airports?
But yes, I think work has already begun. Few airlines at some airports are already using it.
Mm-hmm. No, and it'll be the distinction, right? It saves
Yeah.
the airlines also a lot of time and space to do it.
And the experience. I think for us, I think what has been the most important aspect is that everything revolves around the customer and the customer experience. We have not thought anything beyond that. For us, it has been the core. What is the customer need and how do we address it? And how do we make it simple?
So what is the progression of this use case? Because you now have this technology, you're using it in airports, and yours is a non-profit organization. It's not a government organization, but you're providing this service as a quasi-public service with the government on board on everything you're doing. Is there an extension, for example, to hotels, etc.?
I'm glad that you asked this question. Because see, when we have created this credential, it's there in your phone.
Yeah.
Today you can share it only if you have a boarding pass. It is an automated trigger, right? As soon as you upload the boarding pass, the credential gets added and shared. But why not just allow the credential to be used independently? And again, it could be a much more privacy-preserving way of getting your identity validated at various places. Like it could be a hotel. So you land at a particular destination, check into a hotel. And I know you travel a lot, surely. And when you are waiting for getting checked in, right? You are waiting for that other person, other guest to get processed, etc. It takes like 10 minutes, and that 10 minutes is a long time. You wouldn't want to wait that long. How would it be if you entered the hotel with your face? And maybe the hotel room itself, right? You could enter with your face, or you could stand in front of a kiosk and your card gets issued. And then you
What
walk
are the
in.
downsides, the risks? Honestly.
There are no downsides.
No,
Tell me.
Be objective about it.
100%
because this
objective.
is sounding like a very dystopian future.
It's not. It's happening today.
It can extend. I'm just thinking off the top of my. It can extend to advertisers. If I'm walking through a mall now, my face is being scanned, and then my phone's getting
No, so it
bombarded.
is you who start everything. So remember this. With Digi Yatra, it's you as the user who initiates every conversation. So you want to share the boarding pass to the airport. So you share the credential. You want to enter the hotel. So you share the credentials. Right? It is you who initiate everything. It's not like some camera at some place captures your face and then they validate it with what? They need you to accept that validation or you to initiate the validation. So it's always you. That's the reason why it's called a self-sovereign identity. It is basically you who drive everything. It is not somebody who can just capture. That is surveillance. So if you are walking on the road and somebody captures your face and validates you with something, that is obviously surveillance, right? But
So
we don't do that.
So the same platform you're saying as of this moment cannot be used for surveillance.
Absolutely not, because where is the credential? For surveillance, you need a central repository.
Right.
We don't have any central repository.
Okay. What does this whole system look like when you add an AI filter to it? Because that's the reality. Is
So
that
the
something
AI
you want to adopt? Is that something that you're worried could turn into, an opening for misuse?
So AI per se, if you were to look at it, the one thing that we use is the face match, right? Beyond that, there is nothing that we use. But you bring up a very interesting topic of AI, right? And you look at any industry for that matter, right? Airport complex industry, right? Where so many different service providers coming together to provide that one passenger a memorable journey. And different entities, right? How do they get common situational awareness? AI can help. How do you make your airside more efficient? Like, for example, a flight coming in, landing, and then which is the stand that needs to be allocated to it, which is the nearest, most efficient sort of a thing, which one will take the least taxi time. All these aspects, right? AI can help certainly enhance the efficiency of the airport operations. And this is not just airside, it's the terminal, it's the land side, right? The vehicles moving in the land side. All that flow can actually become much more efficient using AI. But for us, I think AI is more on just the face match. Beyond that, there is nothing much because we don't have we don't have a use case at all.
Yeah, no use case at least today. Thank you so much, Suresh, for coming in and speaking to us. This has been a fascinating journey, and I feel that you're just getting started with what Digi Yatra can do. What is the target for the adoption of Digi Yatra? How many passengers on it in terms of a percentage, and where do you expect that to go?
So today we crossed 15 million just a few days back. 15 million user base. We have enabled more than 60 million smiles. More than 2.5 years now. I think for us the future is more from international journey perspective, and again in the international journey also look at the trusted traveler program of any country. That program works only for that particular airport or that particular country, right? Departing from that, arriving into that country. But if you look at a ecosystem like Digi Yatra, you can actually share your credentials to the destination, and then when you reach the destination after a 10-hour long flight, you actually can zip through the whole process seamlessly.
That's the
So
goal.
that's something which we are aiming to, and then of course that's a sensitive border crossing, and therefore we'll have to deal with multiple ministries, and we have just begun those initial discussions.
Well, the future is bright and sky high. Thank you so much for speaking with us today.
Thank you, Tamanna. It's been my pleasure. Thank you.
Welcome viewers. This is a call for Disruptor Show Flight.
During my childhood days, we used to rely on rations. My mom used to tell me, go and stand in the queue immediately. Queues is something which I think every Indian is used to.
You've come from this background where you've had to stand in queue for rations. How do you become the CEO of Digi Yatra?
Why should there be so much of friction in availing a service? And from that perspective, I think this whole thought process of Digi Yatra began. We were asked, right, to write a memorable journey experience for the passenger. And I wrote this very simple story saying that, passenger just walks through all the touch points, and nobody stops him or her for anything.
The initial teething troubles, talk a bit about that, including the vendor that you had for the back end of this entire process. There were questions on transparency. There were a lot of questions on safety. Why should I give my biometrics to a government agency?
We ran the startup challenge. We had a 6 startup shortlist. 2 of them were offered to build. One of them went ahead and built this ecosystem. And yes, we had a parting of ways.
हेलो बोलिए मैडम, डब्बा ट्रेडिंग कब से चल रहा है पता है मैडम आपको? हम और आप तो जन्म भी नहीं हुआ था हमारा.
We investigated a shady advisory firm that has spent big bucks on advertising on the front pages of national dailies.
ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है.
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
After our report, we also saw NSE came out with a cautionary circular to the investors. Market Regulator Securities and Exchange Board of India has also come out with a release talking about the actions that it has taken. Cyber complaint has also been filed against the entities involved in this entire Dabba trading scam.
The markets move fast. Hello and welcome. You're watching KYC. Today we're going to speak about a cable and wire company which has come out with numbers, and honestly it does extremely well in terms of its return ratios. It's done 20% plus over the last 5 years in terms of ROCEs, and not just that, they generally guide extremely conservatively as well and generally exceed guidance. Now some of these cable and wire companies in India are doing extremely well. Even in general, given the macro tailwind, but this one is also going to do exports. So KEI Industries is what we're going to talk about. There's been a sharp ramp up in exports in Q1 FY26. And that is not just the only trigger, frankly. And what I want to know is the first piece is competition, because you have a couple of players who are likely making large investments in cables and wires in India, given the setup that I've just given you. High ROCs, very good macro and strong tailwind, and there are maybe just 2-3 large players in the space. So the opportunity size is also quite large. But is competition a concern? One, to the industry, but also to KEI Industries. That's going to be my first question. Second one, will the 20% plus kind of ROCE number continue? Why? One, with competition coming in, could this be the new paints? Second, a fundraise. They've done a 2,000 crore rupee equity raise. And does that in some form or shape hamper the return ratios is what I'd want to understand better. For FY26 and FY27 especially, because FY28 onwards probably growth will take care of that, but at least for the near term. Now, in terms of downside risk, is there a downside risk to export market? There's plenty happening on the geopolitical side, and therefore that could be one risk. Capex plan, whether that one is on track. It's a large capex that they are planning, and therefore we'll want to understand that. How quickly do capacities come on stream? Is all of that on track? Sadanand phase 1, that project should at least get done by H2 of FY26. So want to understand whether that is on track. Margins on export versus domestic, this I'd want to know, because they're shifting base towards exports in a big fashion. Now their export is around 13% of the mix. That will likely continue to inch higher. The aspiration is to get to 20% in the next couple of years. If export is going to do well, and if margins are better there, you could well see a margin upside from here. But there's a margin downside. Raw material prices is a key risk. For the moment, they've been able to hedge raw material prices, pass it through to the customer. But is that at all a risk going forward? Cash flow in FY25 was a concern. They reduced the number of or the amount of payables they had because of the large cash balances that they held. Well, is that likely to reverse at some point is what I would want to understand. Will they go back to increasing payables, and therefore will there be an unwind at some point of that large cash flow that went out from operations in FY25? So some of these I'd want to know better. But let's quickly understand the company, and Puneet will join me shortly with regard to this. It was founded in 1968. It's been public since 1992. It's the second largest cables and wires company in India. It commands around a 9% market share in India. They intend to rigorously defend that market share, is part of the commentary that we've got. Supplies to infra, power, industry, real estate, exports and retail. So across the board, it has a pan-India presence and it has a growing global presence with 60 plus countries is what it is present in. Let's look at some of the products, and we'll quickly have that in one slide maybe. Okay, so let's look at revenue distribution first. Okay, 94% is from cables and wires. EPC has come down sharply to 4% now, and stainless steel wires is 2%. EPC at one point was late teens. In fact, not too long ago, maybe FY18 or FY19 was a large chunk of the top line, maybe 18 to 20%. Now it's just down to 4%. They're granularizing their top line more, and that granularity is giving them margin tailwind. So all of that has started to play out. Let's look at the revenue mix as well, and within that mix, retail is now 52, institutional is 48. That allows for better margin upside, because retail will always give you better margins, the B2C. Now let's look at products, and let's pull up that slide, and that will give you a full picture of all the products they do. Largely into almost every product within the cables and wire space. So it has a large plethora of products. Wherever they don't have an R&D or they don't have a specialization, they have tie-ups. And that kind of helps, especially in the EHV cables, where some of the higher kilovoltage cables is where they have a tie-up. So well, that too is likely to drive numbers. When I'm looking at customers, retail customers through distributors is what they tap into. They currently have around 2,100 dealers and they do both international as well as domestic. I did speak about the mix. Around 13% is what the international mix number currently stands at. In terms of value chain, they do manufacturing, warehousing, B2B and B2C, and thereafter also exports if at all. Now, they manufacture through 6 plants. One is in Rajasthan, Silvassa, Sanand. We spoke about the Sanand plant and the capex that it's going through. It sells via dealers, which is B2C. They also do direct to industries and governments, which is B2B. They do exports. 52% is retail, 35% is institutional, and 13% currently sits in that exports basket. Raw material is largely commodity driven, and it follows pass-through pricing, and therefore you'll see very, very limited impact on margins is what the management has guided for very, very comfortably. But that's the holistic picture with regard to what KEI Industries does. Let's get into the metrics now, and let's start off with the metrics themselves: income statement, balance sheet, cash flow, return ratios, shareholding, street cred, street coverage, and valuations. We'll cover all of those 8. And as always, Puneet joining me for that analysis. Puneet, let's start with the income statement.
Well, definitely, Harsh. And the key aspect is the strong growth in revenue that we've seen for the KEI Industries over the last 2 to 3 years. So it's definitely grown steadily, and post the slight blip in which we've seen post the pandemic, it has recovered very well. Like the other cables and wire companies, we've seen a 19% CAGR in terms of revenue. EBITDA has grown in line with a similar percentage. It's very difficult to do that because it's a very highly commoditized industry. Copper prices are very volatile, and we saw that impact post the pandemic as well. But company has been able to maintain that margins. Slight blip which we saw in FY25, and is expected to be around 11 to 12% in this year as well as the coming year as well. So that'll be something to watch out for. But that's driven by the profitability growth of 23%. So we've given this a thumbs up. No two ways about it. It's been a strong product profile over the last 3 years, and that's reflected in the growth in revenue as well as profits as well.
Okay, so that's with regard to the income statement. You can see the journey. Do we have maybe a 3-year or 5-year chart with regard to how the income statement, margins, etc. have moved? Let's pull that one up as well. That'll give our viewers better perspective on how the top line, the margins, as well as the PAT has moved. Okay, let's quickly move on to the balance sheet. And in that balance sheet, if you see the way in which your equity has moved, it's inched higher because of the 2,000 crore fundraise that happened in November of 2024. The other equity number also rising significantly as a result of, one, the strong profitability that we saw in FY25, but also as a result of that fundraise. So both of those reflecting on the book value currently, which is sitting at sub 6,000 crore. It's a 38,000 crore market cap company. Just something to keep in mind. The borrowing number is at around 178 crore, so fairly healthy balance sheet. They've repaid some part of their borrowing, post the fundraise, and the cash bank balance currently sits just below 2,000 crore at the end of FY25. Of course, the Q1 numbers still need to get adjusted in the balance sheet. We don't get that disclosure. So broadly, it's a thumbs up. No question, no worries with regard to how the balance sheet looks at the end of FY25. Cash flow, Puneet.
Well, cash flow is very interesting because we've seen a slight impact in FY25 numbers, and that's largely because of what's happened. In terms of operating cash flow, it's visible that FY25 was only negative 32 crores, while over the last couple of years it's been above 500 crores of cash generation from operations. Now that was impacted due to working capital changes. Inventory has moved up to over 390 crores, and that's largely because of the volatile copper prices that we've seen the last year. So the company did go out to have higher inventory of copper. It's similar to what they did in 2022 as well. At that time as well, the copper price and the inventory was over 300 crores
for the company. Because of that, there's been a delay in receivables as well as payables as well. So we've seen that impact happening on the company's cash flow to EBITDA ratio as well. But largely this should be solved into this year, because we've seen that within copper prices it is still at a high, but the companies are managing their way into maintaining the inventory of copper in this particular quarter. So it will be something that we can quiz the management on as well. But largely we've given this a neutral rating because of what's happened in FY25. FY22 to 24, this was largely stable in the metrics that you can see on your screen. But hence, the cash flow to EBITDA conversion was delayed because of working capital impact.
Okay, so that's with regard to the cash flow. We've given that a neutral. We want to see how quickly that unwinds. We spoke about that as well. Let me talk about return ratios. They've been consistently above the 20% mark. No concern there. Not going to discuss this too much. Going to give this a thumbs up and quickly move on to shareholding, Puneet.
Well, shareholding as well, largely been stable. We've seen the promoters maintain the 35% stake over the last couple of years as well. So we've seen a slight increase, and you can see that in the from what happened with domestic investors as well. In FY24, we did see some selling, and that could be one of the key reasons why we've seen an increase of that to 20%. But even from those levels, we've gone back to 26% of ownership from domestic individual investors. This includes all mutual funds amongst and HNI investors as well. So we're seeing that kind of positive impact. For the public, there's been some kind of selling, but that's largely because the stock has also done so well in the last 5 years. But overall, we've given this again a thumbs up, stable ownership by the management, maintaining that kind of view in terms of the strength towards the business, and hence giving this a thumbs up as well.
Yeah, we track number of shareholders as well. That's reflecting on your screen. See how the number of shareholders have inched higher. Let's look at street cred now. 1 month, 6 month, year to date, 1 year. You look at the performance, it's been okay. It's been a flattish kind of a move over the last year or so, plus minus 12%. But you look at the 5-year picture, and that's where you will really see the kicker. It's been a 11 bagger over the last 5 years. So some real solid tailwind, and that performance is reflecting on the income statement very, very frankly. So it's not a surprise to see the kind of compounding that we've seen. It's been one, a PE multiple re-rating that's happened, and you've seen very, very strong tailwind even in terms of growth. So both of those are playing out as we speak. But talking about valuations, Puneet.
And in terms of valuations now, it's important to look at the relative valuation of the other peers as well, because while KEI Industries is trading at 35 times price to earnings for FY27 would seem expensive. When you look at the other players as well, they are valued very well as well. For someone like a Polycab, it is the market leader, has 26% market share, but maintaining that kind of valuation. And we've seen over the last 2 to 3 years, for KEI Industries, it has now become, in terms of valuation, on par with someone like a Polycab. It was always the second largest player, but we've seen that kind of valuation in terms of KEI to be maintained at 35x. Let's also look at the other players like Havels as well as in terms of Finolex. And for Finolex, we see that valuation discount largely because of the company's slow growth. So the market not rewarding as effectively as someone like a Polycab and KEI. And for Havels, we've given this a comparison. But for Havels, there's also the consumer discretionary and the AC business that takes a higher valuation, and hence at 48 times. The wires and the cables is one part of that business now. So for Polycab as well as KEI, we've seen that inch up. For RR Cables, it was a stock which was trading around 24 to 25 times before the last couple of quarters, seen that inch up as well. So a high growth industry with industry leaders and players participating very well. So we've still given this neutral only because of the higher number, but the growth aspirations of the company to have till FY30 is what they mentioned as well, is very, very high. So we have to look at that aspect with the growth coming in. The market is hence okay to give us a slight premium to someone like a KEI Industries.
Absolutely. So that's the take with regard to valuations. And quickly on to what analysts are saying about this one. 18 buy calls, 4 holds, no sells, 1.5% upside. So the upside in that sense seems capped, which is why we've given this a neutral. Chairman, Managing Director, KEI Industries, to talk to us about, one, the quarter gone by, but overall, the big picture as well. Mr. Gupta, you set this up from scratch. You joined this place in 1979. What is your take with regard to incoming competition? You have a fantastic grip on the business as well as on the industry. Give us your honest take.
Good morning.
Good morning, sir.
I think that we have established ourselves very strongly in this business. We know the business, how it is to be run in all fronts. So I agree that some big players are have announced their entry in this space, but the market is substantially growing. Economy is growing, and I think there will be a space for one or two large players to come in. Will not much make difference to us. We know how to diversify our product portfolio and diversify our markets and market geographies. So, even if we have to face competition in domestically a little bit, we will cover it up from other geographies for the growth purposes. But I'm sure that we will be able to maintain our market share and even grow our market share domestically as well.
Mr. Gupta, a very good morning to you. Thanks so much for joining in. It's Puneet this side. I just wanted to take a couple of questions on the new Sanand facility that's coming up, and you've given a very detailed outlook in the past as well. But on phase 1 specifically, you will have the low tension as well as the high tension cables coming in. In that context, what is that expected to do for KEI in the medium term? Because you've given a strong guidance till FY30 for about 20% revenue growth. So essentially, with the phase 1 coming in, how do you expect that to benefit KEI? Because there is some competition in this particular segments as well. So how would you be catering to that?
See, our phase 1 of this project is likely to be operational by September 25, and full project will be operational. So phase 2 will be operational by end of first quarter of FY27. But about the competition, I think the demand of our products is quite significant. We are actually, struggling to meet the orders timelines because of the capacity constraints. And a lot of international customers are waiting for us to start catering to them. We have a little bit slow down on our export customers because I don't want to lose our domestic market as well. So as soon as our capacities come up, we will full-fledged go for the grabbing the market in domestically as well as international.
So what is the margin picture like, domestic versus international? Do you enjoy far better margins internationally? That's my first question, and let me wrap a second question along with it. What helps you stand out internationally, sir? You're in 60 plus countries, you're growing market share, you've guided 20% of your revenue coming in from global. So give us that picture.
See, first is that we are going all the way out to get, product certification in different countries. Product certification in electrical industry is a must, and we must comply with the technical standards prevailing in that country. So we have to, like in India, BIS. Similarly, in most countries, they have their standard body, and we have to obtain country-specific approvals. That is one thing. And all these things takes effort and cost money, and also the backup manpower who can handle all these aspects. Secondly, the creating agent network and other marketing network to handle different geographies. So and also making our product compliant to that, including customer audits, including specific specific audits like ISO type, which customers do. So these are the things which we have done correctly in last few years, which has enabled us to get into different markets.
Mr. Gupta, in terms of exports and continuing with the part that you mentioned that you'll have to obtain these certifications and once you get that, you'll be able to supply those products. You mentioned that roughly about 13% is coming from there. You're looking to 17 to 18% of revenue from exports very, very shortly. So in terms of the advantage to you, will it also be twofold that because of Sanand coming in, you'll have those kind of products to cater to the export market as well as have the cost advantage versus the players who are in these export markets? Will that be a right assessment?
Yeah, because in Sanand, we will be closer to the seaports. So our logistic costs of inward and outward freight should go down. So that, and also the time required to ship our goods will also go down. So that will be beneficial because in exports, the customer needs the material. They give very short time to manufacture, and you need to have capacities to cater to large orders. And that is why large capacity and proximity to the port is always beneficial.
And just one question on your second phase of Sanand, that as you mentioned, you will have the high voltage cables, HVDC as well as EHV cables coming in. Will this be higher margin compared to the current 10 to 11% that you do, or will it be largely in terms of product? I'm asking, not for export specifically. In terms of product profile, do you think that will have just slightly higher margins compared to the current margins of 10 to 11% that you operate in?
Yes, they will be having higher margins compared to current products. And but also they will, they take little longer time to, even after the production comes, then we quickly have to go for type test and other product certifications of the factory.
Would it be materially higher? And so export margins also, are they materially higher?
Yes, little bit higher, and I can't quantify, but definitely they are better.
Got it, sir. Sir, this cash flow unwind that's happened in, or rather cash flow wind up that's happened in FY25, you're obviously sitting on surplus cash, so it makes sense. Does it at some point unwind, sir, as the capex goes through fully? Is that how you visualize it? How should one see it?
See, cash flows will always be, changing, because as the new capacities comes up, then we will be pumping a lot of money into the working capital. And the one way is that we, fund the working capital by debt, or the other way is that if we have the cash flow, then we are using our cash flows to fund the working